Doug, I asked you a couple of months ago how low the 10-year would need to drop to really spur mortgage demand, and you said it might need to go to 1.5% or below, and we all kind of said, well, that seems far-fetched, and here we are.
Here we are. And at that rate, with mortgage rates related to that 10-year Treasury, there's about $1.5 trillion of mortgages outstanding where the owners of those mortgages could benefit from refinancing. And we've certainly seen a pickup in applications for a refinancing of existing mortgages.
And what happens then? I mean, so we get another refinancing boom. It helps people out with their monthly payments a little bit. I mean, but what is the larger significance of that then if it's not even going to do anything to really spur the housing market?
Well, there's a difference between refinancing your existing mortgage, where you can improve your cash flow, have more money available either for savings or consumption, and the consumer is very strong right at the moment, and the difference in buying a house. So in buying a house, it becomes an issue of affordability. We've seen house prices slow down. Now, with interest rates coming down, there's been a little bit of a pickup in existing home sales. The new home sales numbers that came out today were actually down from last month. But it creates an affordability in the housing space that kind of holds it up after it had dropped off a little bit from 2017.
Yeah, I'm glad you brought that up, Skylar. That's exactly what I was going to ask you. You know, we saw sales and things generally trend upwards till about 2017 in this housing market, and now we're kind of going sideways. And we have as low mortgage rates as you could possibly ask for. Do you think people are maybe thinking they could go even lower, and that's why there's not a ton of urgency yet?
No, I mean, I think there is urgency, and for many people, now would be a great time to buy because they see these low mortgage rates. It's very favorable. We've actually just seen, for the first time in a long while, also a new uptick in the amount of homes that are newly listed on the market. So, in other words, like a good and true influx of new supply, not just homes being left over from the month before because things are slowing down, right? So this is, for some people, a really favorable time to buy if they, know they're going to live in the house for a long period of time and they want access to those incredibly attractive low mortgage rates in terms of housing interest. The rub is that those interest rates do nothing to help you afford that down payment. And one of the ways that we understand, you said it's going sideways. In many ways, I think it's doing something pretty darn appropriate, which is, home values outpace incomes and people's ability to save for those down payments. Demand had to pull back in many ways, and for a lot of people, they're still not able to return to the housing market because they don't have that down payment. Right. They might have the credit, they might want the mortgage, right? But just the access to it is a real challenge, and that's what's causing these markets to soften. So in many ways, I think that's great in the sense of, markets are acting appropriately, right? When prices went too high too fast, demand pulls back, prices start to soften. It's one of the beauties of this kind of system. However, right, in a climate where we're in right now, there's a lot of uncertainty. People are really hoping that the housing market does pick up because one of the main ways that we can stimulate the economy through monetary policy is people's interest in housing. So, Douglas mentioned those, when you get that refinance, it could be cash out to actually spur consumption again. And that's the hope, that it would keep this expansion moving, keep it growing. I think housing slowing down doesn't have to be a bad part of that picture, right? It could be a good part. It's an important reset, keeps things affordable. And the spurring and refinance, and cash out could help the economy as well.